BNI is sometimes I've been part of BNIs, and they can be like, if you're not here at 7 o'clock, or
Yeah.
closing the
Yeah.
doors, and
Yeah.
if you miss like a half a day, like
Yeah.
you're out of the
Yeah.
club.
Yeah.
But I think BNI it's a good, it makes people that are serious,
Yeah.
you know,
Yeah.
and you do want that, if you're gonna refer stuff out, you want people to be serious.
Right.
'Cause
It's your reputation you're putting on the line with that
yeah, yeah,
referral, I mean, whether it's BNI or not.
right. Yeah, and it's I think it's interesting because you can kind of get stressed out, and I think people realize, like, because we sometimes we don't do a good job, or we just drop the ball, and it's like I try to give more grace to where referrals, or I'll just call the client and just be like, hey, I know we referred this person, it didn't work out, I'm sorry.
Yeah.
Everybody's trying here.
Right.
Um,
Right.
So here, Steve, we're with you here.
Yeah.
You're with Movement Mortgage.
Yep.
And you kind of tell me, how'd you get into the loan? You're a loan
Yeah.
officer.
Yeah.
And I would imagine, the last year have been crazy, and but maybe kind of how'd you get into it?
Yeah.
How are you feeling?
Yeah.
Yeah.
So it's a interesting story. So fresh out of college, was in a banking management program with one of the regional banks, which doesn't even exist anymore here in Connecticut. And I was at shortly after I graduated college, so it was like in summertime, we were at a family barbecue for 4th of July, and I had an uncle who was an accountant, and we were talking about banking and all, and he's like, I'm going to be frank here, he's like, if you're in banking, if you really want to make some money, maybe you should consider the mortgage side, which I'd never even paid attention to. So lo and behold, one of the big insurance companies here in Connecticut was opening a mortgage company. They purchased a broker company out of New Jersey to facilitate mortgages for all their employees, and they had a position for a mortgage loan processor, and I applied for the job, and it was more money than I was making in the program at the bank, and spent the first part of my career as a processor and then an underwriter. So, and I'm not a salesy kind of guy. I don't get out and rah rah and woo people to give me business. But I knew how to put a loan together. I learned how to put a loan together, and I saw that there was more money to be made on the origination side of our industry. So had asked to see if I can get into that position, was granted it, and it's been, I say over 25 years. It's actually over 30 years. I just don't want to sound too old sometimes, but yeah. So that's how I got in, and went from originating to getting a leadership role with we hired a few loan originators, and then had done that through the financial crisis. The financial crisis hit in the mid-2000s, devastating at the time. Family, kids right in the midst of schooling. What am I going to do for the next number of years? And just kind of got through it, and was again in a leadership role that a company took over the company I was with, and for 10 years I was actually out of origination and leading a team of originators, and got the kids through school, grown and gone, and really just wanted to get back to the nuts and bolts of mortgage originating and working more closely with clients and realtors, and not all the other meetings and things that are involved when you're in a big institution. And so
the bureaucracy of
yeah. And joined Movement Mortgage. It was 5 years this November, and it's
Nice.
been a wonderful time.
Yeah. And we've done some deals together, and it's been great. I think it's a good company.
Yeah.
And I think part of this podcast is really kind of talking about what the true professionals and what goes into it. And it's interesting how you're talking about wanting to move away from that kind of corporate and get back into like helping people.
Yeah.
And I think that's what people kind of pick realtors and loan officers too quickly.
Yeah.
And don't realize that yourself, you're going to help them navigate the journey.
I use that term, that word, navigate, often in a conversation, because it really is that.
Yeah. So what is your kind of your steps that you like to you're bringing somebody new in, or how do you educate the people?
Yeah. So it's people do come in pretty quickly, and they don't take the time, I think, often to learn really what they need. buyers. I'm saying. So we get a referral. Gosh, there's so many first-time buyers, especially the last few days or last few years, where folks aren't readily, selling their homes and moving into move up properties. It's more first-time buyers coming in for the first time. I mean, there's not enough homes for all of them as it is. And we've got wonderful products here in the state. A lot of first-time buyer programs through the state of Connecticut, and all the conventional programs and government loans and renovation loans that that we've talked about in the past. And but it's a matter of getting the clients, the potential buyers, to seriously consider that there's a lot to get accomplished before you get out there. Over these number of years in our industry, we've gone from, when I first got into the business, typing out verifications of employment and so on, to getting to the point prior to the financial crisis where there were programs you didn't verify, a whole heck of a lot for someone getting a loan, to now getting back to, regardless of how well qualified someone is, we've got to get deep in the weeds on income, on assets, on credit, and really talk about budgeting and really help people understand what it means to own a home, what the monthly payment is going to look like, can they manage it, and then make the then get out there and start looking once we've come up with those numbers and those answers for them.
Yeah. And I think, and Ed, probably, well, what's the biggest thing? And because we hear the horror stories, what should the client not do, in the middle of all of this?
Yeah. Well, certainly nothing with credit. Don't open anything new with credit. Job changes. I'll always have the conversation with people because it's, especially again in this market, it may be a number of months before they find the place that they want to buy, and life happens during those months. A transmission goes on a car. Someone loses a job unexpectedly. Someone has a job offer where they can, make a move and better their financial position. So we have that conversation. Should anything like that be happening, reach out. We'll kind of help you out with, how it may affect mortgage qualifying or home buying. But cash, having cash on hand, that's another thing we kind of say is no. We need to be able to trace your assets. We need to be able to see your credit. We need to be able to maintain your credit score if it's at a level that, we don't want moved while you're out looking and buying. So a lot of facets and a lot of things to consider. And another thing that's really happened, and COVID has really changed a lot of this, but with the way people are paid, these days, it was pretty straightforward, traditionally. Someone's on a salary, someone's on hourly, or someone's self-employed. I mean, those are kind of three main buckets. And there were, basic ways of verifying all that. But with COVID, there have been so many changes of how people are paid or how they work or how many hours they work, or there's commissions and more bonus structures and other types of income and each of those types of income get looked at differently in qualifying.
It's interesting.
Yeah. So that all needs to be vetted to confidently be out there.
When you're talking in that way, like the difference between a lot of people are doing gig work, they're getting like a 1099 or versus a W-2.
Yeah.
That's so you're going to actually look at are you going to take the 1099 and do a percentage of that? Because it is it's not steady, or how does that work?
Yeah, so the way so if you're a salaried person, that's pretty straightforward. You make $70,000 a year, and that's what your pay stub shows. That's pretty straightforward. And hourly, if the hours vary, we have to do some averaging. With 1099 work, independent contractor, self-employed, most programs are going to require a 2-year history of it for us to be able to use it. Number one, there's some exceptions. Number two, we look at an averaging over the period of time. We're going to ask for not only 1099s, but how you've completed or registered it with your tax return. So are you Schedule C or partnership or whatever it might have completed? And we kind of look at a net number, and there's some things that we can add back as far as expenses someone may take. But so there's a different way of looking at that. And we do have people that'll be working one job, but then have a side hustle, which is perfectly fine. And maybe, it doesn't factor into qualifying and it's okay, but it's going to be unearthed because there's going to be deposits from it and all that. So it's something we need to address and make sure we're handling so it doesn't be a detriment down the road, at the last minute when you're looking for your final approval.
Well, we're being in the trades, and, we subcontract out a lot of our work. And I've got buddies that, hey, I didn't pay any taxes. I was able to write everything off and blah, blah, blah. And I'm like, that's great. But now, it can come to bite you because you're not showing any income.
Right.
And then when they come to you, you're kind of like, well, it's good, but, you don't.
Yeah.
So it's something to think about.
Yeah.
What do you think about with interest rates? I know everybody's very concerned And I think it takes someone like you to like the voice of reason of being like,
Yeah.
it's not as bad as we think it is.
But it really is, and you know, I don't hate to sound like the old man on the lawn, you know, or get off my lawn, but you know, when I bought my first home, I got a 10.625 30-year fixed rate,
Yeah.
and you know, the when you're considering buying a home, in my view, you can't get caught up in the rates. I think again, getting back to COVID, kind of caused this concern a lot of people have, or an anxiety over rates. You know, we had these historic low rates. It's not going to happen again. You know, God forbid we don't have something that, you know, causes that again. And we're back in a normalized rate market. So when we bought homes, it was based on you're ready to buy a home, and whatever the rate was, as the rate was, and whatever the prices were. And if you were comfortable and qualified and able to handle it in your budget, you bought your home. And then if you know, if you were going to sell it down the road, you would hope to sell it for more than you bought it for. But, you know, there's no guarantees on that. But, you know, and historically that kind of bears out. So with interest rates, and NAR is running a great, you know, National Association of Realtors is running a great ad campaign now where, you know, it's like, you know, it's a U market, meaning that, as I'm just saying, if you're ready now and all the numbers work, then pull the trigger and do something. But, you know, so we had that you know, the record level drop in rates, and then they came roaring back up over the last couple of years, you know, peaking at about 8%, you know, back this past fall, and really, you know, freaking some people out. Yet we, you know, did business and people closed. And, you know, what we're thinking is going to happen, we as an industry or the people that we listen to, is, you know, the Federal Reserve is going to start, you know, seeing inflation come into line. Hopefully, you know, employment doesn't soften too much because we don't want people losing jobs. But that's something that the Fed kind of looks at to kind of start bringing rates back down again. And we'll start seeing, you know, a drifting down of interest rates again, you know, maybe, you know, a bit throughout this year and into 2025. It doesn't seem to maybe be as dramatic of a drop as maybe was thought, nor, and it might take a little longer to get where we're going to be, but you know, we're in a normal market. We're in single-digit rates. We're, you know, probably in the mid-sixes on a standard conventional loan. You know, these days after some Fed news yesterday, and you know, I think I've seen some projections of maybe as low as the low sixes by the end of the year, but you know, nothing substantial either way.
I think people just have to kind of get normalized to it. I think, you know, if you started looking for a home, you know, 2 years ago, it was nice. You could buy a lot.
Yeah.
So now you're like, oh, I can get all of this. And now you kind of, you know, the people that were in the market got excited.
Yeah.
And then there was the mad rush. And now they can't maybe get that fourth bedroom, you know, or they have to have a little bit more of a downsized home. But I think people will understand that, like, listen, this is what I can get now.
Yeah.
This is what's normal.
Yeah.
You know, and I think, you know, looking at where we are in Connecticut, the minute they lower the rates a little bit, there's just going to be more buyers coming back into the market.
Exactly.
And I think you're, you know, they're right on spot. You got to buy it now.
Yeah.
Like,
Yeah.
don't wait. Don't even wait. You know, I heard this. I forget who it was from. You can always refinance. You can't rebuy the home.
Right.
You
Yeah.
know.
Yeah.
So go out and buy.
Yeah.
Because if the rates come down, it's probably going to push the price of the house up, because there's going to be more people in.
Yeah, and that your monthly payment's going to be about the same. You know, rate may be down, but even, you know, if your house is now, you know, what you're looking to buy now, maybe $20,000-$30,000 more in July.
Right.
You know, if rates dip a little bit, more people come in, and even though the rate may have dropped a little bit, net your monthly payment will be similar. Right. So yeah.
And if it ever happens that it drops down, which it won't, back to you know, to 4, 3, and 4. I mean, some people have like 2.
Yeah. Yeah.
Just refinance.
Yeah.
You know, you can do that.
Yeah. Yeah. That social media, you know, kind of meme or moniker that's out there. You know, you marry the house and date the rate.
Yeah. Yeah. Right. I love that. Yeah. People, you know, and again, like, it's someone like yourself that can educate the client. You know, understand. Like, listen, you know, get into the home you want. And that, you know, especially, I know, I mean, you know, you've done deals with Sarah too, my wife, the realtor. You know, she has buyers out there just trying to find something.
Yeah.
You know.
Yeah.
And another product I think is good to talk about, because we've done a couple deals together also, is the renovation loans, because we're in a, you know, in Connecticut, there's a lot of older homes.
Yep.
And, if somebody's coming in there with maybe don't have a lot of cash, but they're going into an older home, what do you do?
Yeah.
Right. So maybe talk a little bit about the renovation side of things.
An incredibly underutilized
Yeah.
product, and we talk about it every year. And it's funny, every year, here in New England, typically from Thanksgiving through the Super Bowl, it's a little quieter, right? Usually snow on the ground, and so we kind of dust off these products like the renovation loan and talk about them. So it's kind of good because it makes us talk about them, but it's completely underutilized. You were mentioning, there's a ton of people out looking to buy homes. The number of people looking to buy homes continues to grow. And in a lot of parts of the country, they're building homes. Here in Connecticut, it's an older population. There's not a lot of tracts of land to build. And the inventory is older. So you need to find a place that might be in the school district, might be the downsize you need, or the upsize that you need, or the town that you wanted to get back to, or a place for your dogs to be. And then the renovation loan, you can build it to what you need it to be. We do either a government, the FHA 203K, which is a very little down transaction that allows for revamp the whole place to your liking. We also do a regular conventional Fannie Mae home style product as well for someone who has some more money down or wants to do something a little bit different. But just such an opportunity to put your own taste on a place that's in the right spot and has the right bones.
Yeah.
And it's not a difficult process, and you can close, initially almost as quickly, and pretty much as quickly as you can on a regular transaction, then start the renovation after you close, and it's actually exciting. You get into the planning and really have a lot of fun with it.
Yeah, and I think so someone like yourself that understands it. There's other you guys have to understand that there's this product's been around a long time, but a lot of people haven't, maybe when it gets slow, like you're talking about, start reaching out to drum up business, and they say, hey, we offer this, but they don't really.
Right.
They don't know how to do it.
Yeah.
It can be a problem.
Yeah.
Like it's kind of a disaster. I mean, sometimes too. Like because sometimes you're adding a HUD consultant involved with this,
Correct.
your contractor, and the format of the contractor has, you're a lender. You need everything documented.
Yeah.
So most contractors don't want to document stuff.
Yeah.
But when we think about remodeling and we think about the cost of remodeling and other means of financing that, the renovation loans is so cheap.
Absolutely.
What is it? What's the typically that additional? Isn't there? There's a little bit more of a rate hike.
Not much, 1/8 to a quarter.
Right.
It's nothing. It's nothing. Dramatic.
And you think about when we're going to offer financing like unsecured, like where it's 12 or 15%. I mean, or whatever the state allows. It's like the highest. It's the highest. And then we can only usually do 10 years or 10 or 15 years with something like that. So it's a big monthly payment. Yeah. But for a renovation loan, you're just adding, a couple $100, and you're getting a lot of work for the money.
Oh yeah. Another feature to that product, that the FHA one especially, and only because we were talking about rates as well, is so you buy the home, you finish the home. You have one mortgage. You've got a first mortgage interest rate on it. But if rates improve to the point, FHA is a streamlined refinance option. So you can streamline refinance without a new appraisal, without another credit qualifying, income check, and all that. So it's a great product to get in and do what you want, and then easily be able to convert it down the road and an opportunity to refinance as well.
Yeah, I didn't know that. I mean, especially right now, if people do have that false hope that rates are going to go down, that's a good one to kind of talk about. Yeah. For us, we do so many remodels. I love the product because all of the remodels are trying to work around people that already live in the home. And it's a like if you're there, you're cooking, and we're trying to redo your kitchen, and you got the turkey in the oven, and we're like, we got to take that oven out of here, and it's very disruptive if you have kids, and we're in your home, we're disrupting. It can be very stressful. But if you roll it into your mortgage before you move in, we can get a lot of that work done, especially floors and paint and all
Yeah.
that stuff,
Yep.
instead of moving your furniture around, or you having to leave or find a place to live
Yeah.
for a bigger renovation.
Yep. Yep.
So it's been a good product. But why do you think most people don't do it? I mean, because we've been trying to figure this out for forever.
They think it's daunting.
Yeah.
I really think that you know, and they're just not educated on it. And you know, the real estate community, to your point earlier, you know, when we bring it out and say, hey, we do these, it's not a lot of realtors that have really dug in and you know, and grasp the real inner workings of it, because they can help acquire listings, you know, with a real good presentation about how we can maybe, you know, present this as a renovation as well. I think over the last few years, especially with the inventory struggles that we've had, that it's been, you know, more folks are getting more accustomed to or used to explaining it or using it as part of their marketing. But I think that's it. It's just a daunting nature, and it isn't all that much. I'm sure there's some paperwork in advance. You know, you work with a lender who understands the product. You know, we have a renovation team. You know, that they'll reach out to you as a contractor and you know, work with you on any paperwork we need or anything from your subs or so forth, and really help the process move along and make it easy as possible, you know, for everybody. So you know, just a few little quirks up front, but you know, if you take it as an adventure and have fun with it, and you know, build a home for you know, or renovate a home for you know, to your liking, I think it can really be exciting.
Make it your own.
Yeah.
Yeah, I think you know, in the past market, realtors, with it being such a crazy market, you know, about a year, you know, a few months ago, when everything was like $100,000 over ask, and it was just this thing. If you had a renovation loan rider in that, forget it.
Yeah.
Like you weren't even, you know, everybody's waiving inspections and all cash offers.
Right.
You didn't have a fighting chance if you threw that this was going to be a renovation loan.
Yeah.
So I think that was part of the realtors not wanting to do it. But
yeah. I think now though, from the buyer's side, if they understand the product, you know, they can look at a property that they might not have even had on their radar before. You know, so you know, there's a lot of, you know, there might be activity, but you know, if there's a home out there that's dated, that's smaller, that's you know, I don't know, doesn't have the bedroom count that you need, and it's not attracting as much attention, you might be able to go in there with a little bit stronger offer, because you can see who you can, you know, turn it into and maybe win a deal, you know, that way.
That's a real good point, because like, you know, with the market still been inventory being so tight, like having, you know, something that's been overlooked.
Yeah.
You know, saying, okay, well, it's in a good area, I like it, I can do an addition.
Yeah.
You know, I don't think people realize. Add that primary suite on that first floor.
Yeah.
Roll it into the renovation loan. And you know, you might have just scooped up a nice piece of property that no one else could envision.
Right.
You know.
Right. Or didn't want to deal with it. You know, the prospect of a renovation loan.
Right. I think, you know, when we see problems, and it hasn't been with you guys, but with other lenders, and this is more to the realtors, you know, a lot of times if it's a mortgage broker out there and they're you know, they're selling, they don't know what they're doing, and they're selling it, you know, and everybody knows that you're always moving the mortgage on to other, you know, wholesalers. What we found is why some of this took a long time was if that originator didn't really know how to get the paperwork together. It would take a good amount of time to get the paperwork together, and obviously, you know, the HUD consultant comes in and the contract, you go back and forth, and then they would go push it to the wholesaler's underwriter.
Oh yeah.
And then everything would come back again, and you know, it's not 60 days, it's 90 days, and it keeps going, and because nobody knows what they're doing, and they're just, you know, kind of moving things over. Yeah. So those are kind of the horror stories that I think realtors hear of or have experienced.
Right.
And I think that's not the case when you have, you know, people that know what they're doing.
Yeah.
You know, they get the information up front, and then when they send the packet over to, you know, either your wholesaler or however it is, it's complete, and you move it through.
Yeah.
But it's still, you know, I think I've always envisioned it to be a great, you know, like we said, the homes are so people don't, you know, there's so much cost in homes.
Yeah.
they get the roof and the heating system
Yeah.
and the floors,
Yeah.
kitchens and bathrooms. Um, what do you? I don't know how people can afford it, because I mean we're in this stuff all the time, and
Yeah.
it's expensive.
Yeah. Yeah.
Um, but I I think I would imagine you kind of feel honored, to be part of the journey, first time homeowners.
It's when it first got into, not jokingly, again, I was being frank and honest. You're getting in for the money, and you want to be successful, and you want to, bring your family along, and you get to a point in your career, I guess, well, just mature, and you realize really the benefit and the help that you're offering, and the, the joy in that, and there's some folks out there, and some, they just don't think they can buy, or or are horrified with what the process could be, or are embarrassed by a situation, and to just have a conversation and help people and get them on the right road. And then get them into a home, and they, get something for their family. And it's not even just young people. It's middle-aged folks that haven't purchased before, never thought that they could, and they really can. And it's again, getting back to the first-time buyer programs here in the state of Connecticut, it really helps. A lot of these folks, because usually, people work, so they got income, and they understand if they're going to buy a home, they need to have decent credit so they can work on that. But it's hard for people to put away money. And the industry's come a long way over many decades, but even, the last number of years of offering products with less down, there's just so much data that all these agencies, Fannie Mae and Freddie Mac and FHA and VA, have to know where the risks lie and don't, that it's opened up opportunities for lending for a lot of folks that just didn't think they could.
Right. And I think somebody just come out and ask. You'd be surprised what you might be eligible for.
Yeah.
And I love how, what you just said about, people are embarrassed or something.
Yeah.
Like, stuff happens.
Yeah.
You'd be surprised. Maybe you had medical bills, you had to do a bankruptcy or something. There's products out there.
Yeah.
As long, you have to have a little time. But there's ways to to get you into stuff.
Yeah.
And the government has a lot of good subsidizations.
And a lot of the surprise even comes in, we have to do our due diligence up front. I don't mess around with verbal stuff. And if a borrower just doesn't want to give me pay stubs, or we're not going to be able to help them to the extent that we need when we're doing a pre-approval up front. But when I'll have a conversation with folks, we'll determine where their comfort level is on housing expense. And then they'll also always ask, well, how much can I afford? A lot of folks are shocked what they can actually get to, and they're like, oh my gosh, I would never want a payment that high, so there's a lot of surprise, especially with the first time buyers, and getting back to that hustle and bustle that we had over the last couple of years, and people getting caught up in the bidding wars and all. You have to, it's an emotional process, but it's also a business transaction for yourself. You need to be realistic about your budget. Look at all the numbers, be comfortable with, with your numbers, and then make your moves from there. And if you have a little wiggle room and you're comfortable in doing it, go ahead. Yeah. But,
and your team, how you're talking about it being, emotional, building your team and bringing in the professionals when you go through this is like, not, the professionals are going to get the job done, but they're also going to be that kind of rock, that, because it's super, super emotional.
Yeah.
Like, it's usually, especially first time home buyers.
Yeah.
I mean, it's, it's a lot of money.
Yeah.
It's a lot of responsibility.
Yeah.
And then, it never goes smoothly.
Yeah. And it's a lot of unknown, they're experiencing things that they would never had experienced before. So there's anxiety, regarding that.
Right.
Yeah. Yeah.
And a good team, like even a good home inspector, because I don't know how many times we'll get calls on people, the home inspection showed this, and it's like, the house isn't going to fall down.
Right.
It's going to be okay.
Yeah. 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 I always offer, I'm sure you guys do too, and I joke about it with my clients. I said, my kids are grown and gone. I've got my phone and my laptop with me all the time. Yeah. The rubber hits the road sometimes on Friday evening or Sunday afternoon. Reach out, because they might be getting anxious over the result of a home inspection or some number that they weren't expecting. And it's more often than not that that's the case. And sometimes there's some renegotiation that's needed, and they want to speak to everyone on the team, what the effect is, and are they getting a good deal? Is it okay to continue forward? What if I change my numbers? What if me and the seller renegotiate our price based on the home inspection? That's all workable. Even after we started in the process, we can fix that or change it.
So this is a good question in regards to that, and not to kind of say which one is better, but which one is better.
Yeah.
A lot of people will go to their local bank and they're and just, hey, we want a mortgage. What's the big difference between you and the local lenders, like the local and versus a broker?
Yeah.
What's those differences?
Yeah. So we're a mortgage lender. We're one of the top 10 lenders in the country. It's all we do, and we try to have anything and everything that a client could be looking for to be able to offer, and we want to make sure that we do it well. The same intention that the banks have. The banks are in different products as well, and some banks have very seasoned and good loan officers, and others just do it as a mortgages as a service as a customer, but they might not have the depth or breadth of product and what we do. And so we've, especially at Movement, we built our process to be quick and definitive and keep people, all parties involved, up to date, to take any anxiety out of the process up front, but also, through the process as well. So, and then some folks are just comfortable at their bank and just want to, stay there, and they qualify for what they have. But if you want a real deep look at all the different options and have a professional just focuses solely on that, that's what our role is.
The specialization.
Yeah.
Because if your local bank, like you said, they're going to offer the service because they already have the clients that are banking with them. But maybe they don't have as many, they're not using as many products that you guys might have.
Yeah.
Also, you typically they're 9 to 5.
Well, the big difference as well. Yeah. Unless they've got an external sales force that's a commissioned mortgage originator, you're right, and you're going to catch them during business hours and not on weekends when something might be popping up and you need some real advice quickly.
And that's when you need it, right?
Yeah.
During business hours, you're at work,
Right.
and then you're sitting, because my wife, it's just like the most of her work's done, when her clients are available, and when she looks at the lender and it's a 9 to 5, she's like, this is going to be more of a challenging, transaction because. Yeah, exactly. It's that weekend that their guys are trying to figure out and get the offer in, and you need,
my days heat up from 4 o'clock on, and then weekends.
Yeah. So it's interesting, and using with, working with first time home buyers, but nobody knows any of this stuff. There's not, you don't take a class in high school or college on how to life.
Right. That's right.
And there's a lot of nuances, and I think part of this podcast is just to kind of explain what the options are out there and how much goes into home ownership. It's pushed because it's the American dream.
Yeah.
And I think people just run into it.
Yeah.
But it's a lot.
Yeah.
What do you think in your industry? Do you think most people don't know in the mortgage lending?
You mentioned the word nuance, and I use that word in navigation a lot when I speak with my clients. I think perceptively people think it's I have a good credit and I have a good job, I can get a loan. And they don't understand the depth of what they have to divulge, and the importance of getting it done up front if you want to compete, especially, in this market. So, there's nuances as far as rates go. It's just not one rate for all people. There's down payment size, property type, credit score, product, dictates, rate. The income we were talking about earlier, everyone's income is different, even though their perception might be, I make $70,000 a year. It could be made up. That could be 70,000, but made up in a number of different ways that need to be handled differently for qualifying. Assets. I've got $10,000 in the safe, or I'm going to get a gift from my parents, or that's all well and good, but there's ways we might have to handle that. So it's the nuance of really what's necessary these days.
So the details that
Yeah,
people need to give.
yeah, and really have to hopefully trust who they're working with to divulge in advance, because to put an offer in on a home in this market, especially, the seller wants the path of least resistance to closing. They want a really good assurance that that thing's going to go. So, if we're going to give a pre-approval letter, it's going to be vetted. It's going to, we're going to give you a cover letter that explains the depth that we've done it. We're going to give you the pre-approval letter. I'm going to be available to the listing agent, to answer any general questions that they may have, to put them, at a comfort level with the offer. But the buyer needs to, take that step and do it. And I think what also happens is they feel like they're committed. If they give that, now I've got to deal with Steve for the rest of the time, and we're here to help. And of course, we'd love to do your, help you with your business. But there isn't a commitment. We're just trying to help, and we just want to give you, put you on the right path. So, so if you're going to be serious, then you just have to get in the weeds and let us help you out and navigate you through the nuances.
Yeah, and you might be asked, hey, what's this on your bank statement?
Yeah. Oh yeah. Yeah.
And you hear that. Well, I'm not. They're asking for everything. Yeah.
Yeah. Here's a new nuance that's just recently that kind of caught me off guard on a client last fall. There's a company called Affirm, and basically it's kind of a finance company where you can go to, I don't know, one of the big box stores and buy a TV, and you can, through your credit card or your ATM, you can use Affirm and spread those payments out as opposed to all at once. And that doesn't come up on a credit report, but when we get your bank statement, we see these withdrawals going to Affirm.
Right.
That's going to be something an underwriter wants to know. What are the terms? How many payments? Do we have to count it or not? So it's these kind of nuances that you're just not thinking about that could,
And they make it easy for everything.
Oh, sure. Yeah.
$18 a month, for this, or it's. I feel like now that you say that, if I remember it popping up everywhere, like anything that's over a couple $100.
Yeah.
That it is catching that, and then the other thing is reminding me was that pre-approval letter. Has more weight than people realize.
Oh yeah.
Because I get to know a little bit of this stuff
right.
because of Sarah, but like that pre-approval letter is getting evaluated by the other realtors. Who is it?
Yeah.
What company is it? Is it you're saying like doing that due diligence up front?
Yeah.
Certain companies have more weight than others, and when in this market right now, and you're going after, you're up in multiple offers. That's and they're looking at exactly the same offer. Well, I know this lender, I know this guy, he's doing a good job, and he gets it through.
Right,
is going to be picked.
Absolutely.
Yep. Which I don't know if that's but people don't realize it's those nuances.
Yeah. And another thing as far as nuance is the products. So someone may be qualified for 3 or 4 different things. They might be a first-time home buyer, but they also have their own money, can go, straight conventional. Or they might be able to go first-time home buyer with FHA financing or straight FHA. There might be one product that's best for the buyer, but a seller, they might pick Plan B because it's one that the seller might accept on this home, and they really want this home, and they're willing to go Plan B as opposed to Plan A, as the buyer. So. Just laying all that out and giving all options, and then trying to walk through, with the realtor what the best approach is when making the offer.
That's why it's important to be, going with a company that has multiple products,
right? Because
you can kind of, because I definitely recall, Sarah talking about, the changing financing halfway through because it made more sense.
Yeah.
And maybe. Can you do it if like the home inspection comes back with too much stuff, and you're in an FHA product, and if they're eligible to go back into conventional so that there's not
Well, to not have to address those well, if it's already divulged and we're aware, it's hard to flip out and say no, now it doesn't need to be done. But if it's minor kind of thing that conventionally wouldn't be a concern, like tipping and peeling paint or a
Yeah.
handrail or something,
Yeah.
and they'd rather flip it and go to conventional. Sure.
Yeah.
Yeah.
Because some of that stuff is, the stuff we've done for the renovation loans, it can be a real pain in the neck.
Yeah.
So some of the stuff, because there's it's all a lot of old homes.
Yeah. Yeah.
And there's a lot of the historical homes.
Yeah.
So if you take the measuring tape out, a lot of those railings aren't at the right height.
Yeah. Yeah. No doubt.
So interesting stuff. What do you think? So what do you think for this year? Do you have any projections or?
Well, so last year was an interesting year for our industry. It was a tough year, and the second half of the year did probably about as much business as the previous full year.
Mm-hmm.
So ended up net 2 years in a row, pretty similar type of production, which was good, and was carrying that momentum into this year as an industry and even personally. And with closing right through the holidays and in this month as well, but it's gone right back to where it was at the start of last year, where again, historically here in New England, things don't happen as much around the holidays, and we don't have as much inventory coming on the market as we had hoped, which is really going to open up, and maybe rates haven't come down quite as bit as some folks might have thought as early. So it's another slower start to the year, maybe not quite like last year, but we're anticipating it'll be a better year this year than last, and all the bit better even into 2025.
Yeah. We talk to a lot of different people about the housing crisis, because it's starting to become a crisis.
Mm-hmm.
Like, us as builders, we're not building fast enough. I think the governor had come out with like the low income housing. There were like 90,000 units in deficit of for Connecticut.
Yeah.
Where we actually just talked to somebody about these, new regulations for ADUs.
Mm-hmm.
So what is it? It's an accessory dwelling unit, or it might be something else. It might be another, but either one. Well, what is it? What's ADU? Oh yeah, accessory dwelling unit.
Yeah.
Where it's the state came out with some guidelines, and there was, I think, a third of the towns in Connecticut opted in right off the bat, and basically it changes the zoning to allow you to put another house. Basically, it has to. There's guidelines. It's usually around 1,000 square feet, so it's like an apartment on your land without any kind of and then the rest of the towns, they have stipulations, in each town is specific. Right. So that's interesting looking at that, because and I'd be interesting at some point. You probably have to. The lending has to be figured out with that side too, because 1,000 square foot apartment is not 50,000. It's 250 roughly.
Yeah.
I think we're building around that $300 a square foot, so it's closer to 300. But it's going to be interesting, because I don't think, unless we have a lot of different solutions, we're not going to fix. We've got to get housing down.
Yeah.
I mean, and you probably see it too. I mean, some of these people are coming out with college, loans, and it's basically a mortgage.
Yeah.
So
and the inventory, to your point, I mean, not even just nationally, household formation these days happens around 33 years old, and over the last handful of years, those turning 33 years old has been greater than the previous year. And there's already not enough housing nationally for those, and more are coming online, 33-year-olds looking to, form their own household. So it's...
That's interesting. It's 33 now.
Yeah.
I wonder what it was 20 years ago. So it's probably a lot younger, but I think, So 33 is probably when the kids are, you start and have kids.
Yeah. And both parties, husband and wife, maybe, in in jobs, settled where they're going to
Right.
work and want to live, and all takes a little bit longer now these days to maybe, they might move around a little bit before they settle and all. But,
Have some sort of a career.
Yeah.
Well, Steve, that went pretty quick. Anything else you want? Anything else you kind of talk about the mortgage industry that would be helpful?
Yeah, no, we're willing to help. The industry's trying to help. Some of the things that we're hoping would happen that weren't happening during the peak of the market a couple of years ago is just honest considerations of all folks looking to, to borrow. I think of veterans. We do, a lot of VA loans, and it's a great benefit. And there's so many benefits to it and reasons to take care, handle the benefit. And I think it kind of got lost in the weeds a bit as a product that might be a little too involved, and where someone with a conventional loan, may not need to have the, as much take place in the loan, so it's an easier path to close. And that's not the case, so we're starting to see some of that come back around again in FHA loans. So there's products out there, the first-time buyers, the veteran loans, FHA, the renovation loans to help people, conventional loans with lesser down than what used to be. So there's.
And is there anything? I know they're always changing stuff. Is FHA or Fannie and Freddie, are they changing any new guidelines coming down?
Nothing that I can think of off the top of my head that's going to, really move the needle much. Yeah, I mean, like I say, there's a lot of cards on the table, already.
Yeah.
So.
And who knows? Like a lot of stuff is there. Going back to bureaucracy, there's, it might take a little bit longer.
Yeah.
But I think there is, I think in general, most people in the government are trying to help the people.
Yeah.
And I think, that we'll hopefully see something to get the cost of living a little bit further down, or have, I think Canada, I saw something that they were going to offer like a 50-year mortgage or something like that, like just so that you get the monthly payment. I mean, that's I don't know. There's probably different schools of thought on that. But.
I think, to your point, if inflation were to come down a bit, if the cost of just living, got a bit more reasonable for folks, we seem to, 2 steps forward and not, we're lucky if we get 1 step back, but, as far as, expense goes, that will just allow people to take a deep breath and say, okay, I'm ready to buy, and I can take on a mortgage and a housing payment. Yeah.
Awesome.
Yeah.
Well, Steve, it was great chatting with you.
Yeah, I appreciate it, Dave. Thanks. Thanks a lot for
listen,
having
we
me.
recommend you over at Movement Mortgage. We'll give you the, the stuff on the bottom.
Appreciate
there.
that.
But,
Yeah.
wish you the best.
Thanks.